Hi, everyone. My name is Shimon Shkury. I'm here with our podcast, Coffee and Cap Rates, and with Ariel Property Advisors. And today we have a special guest, Kenny Burgos of NAYA, who's the CEO of NAYA, and a very happy dad and expecting to have another child, God willing, very, very soon. Kenny, so grateful to have you here today.
I'm grateful to be here. Thanks for having me.
That's awesome. Thank you. We're going to talk about the multifamily market, but within the multifamily market, we're going to talk specifically about the rent-stabilized multifamily market. In the first quarter of 2026, we've seen great amount of transactions, about $2.4 billion in the first quarter. And we at Ariel, when we look at multifamily, we look at three specific groups. The food groups are predominantly free market, predominantly rent stabilized, and the third food group is affordable housing with capital A. Free market has done well. You know, the rental market is booming. The fact that there is consistent supply constraint is helping it. Investors are buying free market buildings. They're private, they're institutions, they're international, they're all there. When it comes to affordable housing, as long as there's the private-public partnership and the city and state collaborate, we see a lot of mission-driven that's interested in being in the affordable space. But when it comes down to rent stabilized, it's very, very different. Surprisingly, we've seen growth in transactions in this quarter, but you know what? It was because of one big transaction, $451 million. That's the Pinnacle Flagstar bankruptcy. Mm-hmm. And that tells you exactly where that market is. So we're going to talk a lot about that. We're going to talk about the rent stabilized market. Before I jump into that and ask you a bunch of questions about HSTPA, about the consequences, about solutions, and about what we can do here better in the city, I'd like to hear more about you, about where you grew up, what did you study, what prepared you for the role you're in today?
Lifelong New Yorker is what I always start with. Born and raised in the Bronx. My family has deep roots there. I joke that I've lived in every part of the Bronx. And I grew up very apolitical. And what I mean by that is, my parents didn't vote in local elections, only in presidentials. I tell folks in high school I couldn't tell you the difference between a Democrat and a Republican. Just very much disconnected from my local politics and understanding the political infrastructure. That took a quick turn after college, as you mentioned. So I majored in economics. Wanted to get a career in finance, found myself in an internship in a city council, and that's sort of where I caught the political bug. Just blown away, right, at the intricacies of the city and how 51 council members and respective staff were able to make decisions that were influencing my local neighborhood and others. And so from there, I just continued my career on as a staffer in a city council. 2020, I decided to run for office at the age of 26. People were crazy enough to elect me to the state assembly. And there is where, I really got to get involved at where all the work really happens, which is the state level. State legislatures really are the bedrock of our democracy and dictate so much of how we experience our life today. And I still stand by one of the greatest careers and jobs that I could ever have. But what led me here to now lead the New York Apartment Association was a deep frustration as both a lifelong Democrat and an elected official at the inability for both my party and for politicians as a whole to solve problems. In my time as elected official, I was there mostly during the Biden administration, and people will remember, the Democratic Party lost a lot of ground then. We're still shedding people from the party, and a continued frustration from Americans, again, of not tackling the major issues, which right now are showing up today as the new buzzword, which is affordability, which to me means affordability is housing, right? Because people's number one cost typically is housing. To me, every issue runs downstream of housing. You can draw a connection to public safety, to education, to healthcare, to families, all through housing. And so it was a policy that I try to dive deeper into, especially because in my time in elected office, I would sit with my staff, and the majority of cases that came through my door were related to housing, whether it was tenants searching for housing, whether it was non-pays, whether it was just trying to, navigate the court system. And so I said, we need to actually meaningfully try to address these issues, and we'll get more into it. But this is when I first learned about the rent stabilization system and the crisis within it. Obviously, as a New Yorker, I think people are all familiar with the term rent stabilization and a rent stabilized apartment, but it probably ends there. And so that's when I learned more about the 2019 rent laws that had passed the year before I was elected. That's when I learned more about the trajectory this housing stock was on and what it meant, not just for tenants in that housing and the property owners, but for the city as a whole, just given how massive this system is. And that's what led me to this opportunity of now leading this organization, the New York Apartment Association, representing several thousand property owners, representing close to 500,000 units of rent stabilized housing in the city of New York. And I feel now in this position, I can be even more impactful than even in my time as a lawmaker in trying to fix housing policy for the better.
That's great. And that's great because you're really laying out the ground to, I grew up where I grew up. I went to school. I did the political stuff. I understand housing, and now I'm trying to help. And one of the things that's so fascinating, and I started with this, is that in many cases, people here don't always get that we have different types of housing in New York City. It's not just one type. And so free market is completely different. But when you talk specifically about rent stabilized, it has a lot of regulations.
Right.
And these regulations came as a result of HSTPA, the Housing Stability and Tenant Protection Act of 2019, which really changed everything about housing in New York City. So we have about 2 million, so to speak, rental units. We have about 1 million that are rent stabilized, now restricted since 2019 in the most severe way, housing when restricted in terms of income growth. Why don't you talk a little bit about HSTPA specifically, because that really was the game changer.
Yeah. Right before I hop into it, I want to jump off of what you said about the free market. I joke and I question, is there a free market in New York City? Right? When you take the regulated stock, pair it with the public housing stock, that alone is over 50% of our housing stock.
That's right.
You then take away home ownership, condos, and co-ops. You also have good cause eviction, which is the newest form of rent control. Right. So really you have just but a sliver of probably some of the most expensive real estate in the city that I would argue actually operates in a free market, or as free of a market as can be in New York City, because New York City and New York State have the thumb on the scale in so many parts of our industry. But going back to your question on the 2019 rent laws, which you're 100% right, are the most critical legislation passed in a decade to impact our housing stock. And what it did, it has been branded as the most sweeping tenant protections passed in New York State history. But when you actually look at the statute and the bill, nothing really speaks to tenant protections. Most of the bill's impact is actually on the financing and the economics of these buildings, addressing things like MCIs, IAIs, and the most critical component of the bill.
MCIs, major capital improvements,
yes.
IAIs, individual apartment movements.
Excuse me.
No, it's okay. Yeah. You live it.
I don't want to assume your viewers know this. I thought,
No, but it's a good point, because these are the little things, right, that you were able to do back in the day before 2019 as a landlord and increase rents because of that. So you invested in the building, you got something in return. And that was a good aligned policy.
Yeah. But the most critical component of HSTPA that really broke this housing was the implementation of vacancy control. Mm-hmm. And I tell folks there are rent control systems throughout this country that have existed for decades, but none have been so daring as to implement something like vacancy control because of how devastating its impacts can be. And we're seeing it firsthand. Actually, in California, a very similar state in politics and a whole bunch of other things, like New York, they have a law called Costa-Hawkins that is explicitly prohibiting the vacancy control aspect that we have here in New York. And what is vacancy control? People may be asking. It is the regulation of an empty apartment in the most simplest form. Explained out is what I'll say. If you lived in a rent stabilized apartment and I'm your property owner and your rent was $1,000, to keep numbers simple, but also a very realistic number in rent stabilization today, you were there for 20 or 30 years. After you vacate the apartment, I have to provide the renovations to bring it up to code to today's standard. The rent begins from your $1,000. So it is implied that the next tenant basically should be receiving the same rent you had. Now, there is an individual apartment improvement that can be applied to that. I don't want to get too complicated, but you can add a $347.22 maximum increase on the rent, but that wouldn't account for the investment needed into the property. It also wouldn't account for the operating costs of these apartments many times, which float around $1,300 on average. So that vacancy control piece, what we're seeing today, has actually resulted in two devastating ways. in two devastating manners. One is the removal of tens of thousands of units, and we estimate at a minimum 50,000 apartments do not exist on the market today. And I walk these apartments every week, and it is, to me, such a slap in the face in the midst of a housing crisis where people are sitting in shelter with vouchers, ready to be housed, where people are searching, fighting, going on lines for around the block on a Saturday morning to look at apartments. And I'm walking in empty 3 bedrooms almost every week, and policies preventing those units from coming back online. But beyond the individual unit count, what we're seeing is also the valuations of these buildings has fallen off a cliff. And this is what you're pointing to, right? Where there is tremendous interest in free market buildings and affordable housing projects that typically have a public-private partnership and accounting for costs. But I imagine a lot more skepticism in investing in truly rent-stabilized housing that is either has no value. I mean, it's a question to ask, investors and your viewers, what is the value of rent-stabilized building, right? We're seeing properties sell for something like $50,000 a unit in the Bronx.
Yeah, and sometimes less than that, right?
These are 1980s prices.
Yes.
And so, tenant advocates may look at that and say, great, landlords are losing money, but that also translates to a tenant experience. If your building is valueless, then it is valueless to a bank as well. And if it's valueless to a bank or a financer or a lender, how do you invest in buildings that in many ways are 100 years old?
So you're touching on a lot of different things.
Sorry.
And I know it's great. It's great because everything you said we have to touch on. This is exactly where we want to go with this. Right. So you started by saying, look, HSTPA really changed the rules mostly because when you have a vacancy, you can't really get tremendous amount of upside in the rent, although you don't protect anybody anymore.
Correct.
Right? The tenant is out. Why don't you do what California did? And so that's one item. That's a major item. That happened in 2019. But there were about a few other things that happened along the way. COVID is one of them.
Yeah.
Right? And COVID created this economic vacancy that trickles into the world until today. Many cases, we market buildings, right, as brokers that have 10, 15, and 20% economic vacancy, collection problems. What do you do with that? And then that was 2020 to today. Then in 2022, interest rates jumped. So the financial burden creates a physical issue and burden. And I can show you a chart that shows how since 2022, rent stabilized violations and AEPs, alternative enforcement programs have gone up like a hockey stick, you know? And that is because of financial constraint that leads to physical constraint. And lastly, you have expenses. And insurance is one of the biggest ones. So that is the perfect storm, so to speak. And you started talking about the consequences. And you started with the vacant apartments, right? You said 50,000 units are vacant. And I spoke with a reporter the other day. One of the things they asked me is why are they vacant? The landlords are not able to lease them. No, they are able to lease them, but it doesn't pay to lease them at $1,000 a unit, at $1,500 a unit, and it doesn't pay to put the money in. And so what other consequences we have as a result of HSTPA, and how are the tenants really suffering or living, or what's their consequence in that sense?
Sure. You touched on it a little bit, right? So consequences are absolutely the vacancies that are going to continue to grow. So we're losing supply in the midst of a housing crisis when we need more supply. So potentially negating any improvements we make on that front. The devaluations are critical, not only again to just the buildings and the owners and the opportunity to invest, but how can these buildings that are so important and vital for the property value, for the property tax revenue to run this city. I mean, we're headed down a road where some of these buildings can't pay the property taxes, and that has real consequences to city operations. To the tenant experience, I always say it is no fun living in a bankrupted building. To your point earlier, violations have increased tremendously, and this is a direct result of building operations being constrained. The reality is, as a rent-stabilized property owner, you only have but so many levers to pull when facing this kind of financial headwinds. You can't not pay property taxes. You can't not pay your insurance. You can't not pay your super. You've got to pay your water bill, your Con Ed bill, host of expenses that come into operating this building, all while you're constrained on revenue. Collections are down. One of the few levers you have to try and make this work, and we see this actually in the Rent Guidelines Board data, is a reduction in maintenance and repairs. right? You, instead of replacing outdated infrastructure, you may put a Band-Aid on it. You may delay it. Instead of doing facade work on all 4 sides of your building, maybe do 1 or 2 sides. And so we've seen this reduction in spending on maintenance and repairs actually in the rent guidelines report data. And to me, that correlates directly with the increase in violations. So there are a lot of consequences to this law. And unfortunately, I think we're actually only beginning to see a lot of most of them, and more will come as the years progress if nothing is done. But this, I spoke to the mayor directly on this before he actually even came into office. And I said, this housing crisis is none of your doing. You were only in office as long as I was, 2020 to 2024, right? But you are coming in at a time where it is felt so acutely, just given how much time has passed from that law change, to your point, the inflation from COVID. All of these are basically meeting at this moment where you're coming into office. Right. And while it's not your fault, you will bear the burden if you do not approach this correctly. And I told him, I said, I firmly believe this has the potential to derail your entire administration.
Yeah, and you didn't mention values, and you didn't mention values maybe because you're not trading in those. We do. And I'll tell you, the values have dropped drastically. We're talking about 50%, sometimes 60% devaluations in rent-stabilized buildings. Right. And in many cases, lenders will have to work out deals and short sale in order to do that, right? And so you have to think about the capital that needs to reinvest in rent-stabilized housing, and what are they doing? There's a bench of investors that are willing to go in as long as it's slow enough. They're very concerned about everything that's happening and revolving around it. One of the things you did recently is you spoke in front of the Rent Guideline Board and you wrote an article. And what was so fascinating about it is that you took not just what we just discussed, the 3 aspects of multifamily, free market, rent stabilized, affordable. Within rent stabilized, you segregated 2 elements. And you mentioned something about that could be maybe a possible patch, or I don't even want to call it a solution, but something to look forward to from that perspective. Why don't you elaborate a little bit about that?
Sure. So the Rent Guidelines Board, in its statute, is a very blunt instrument, right? It is, this 9-member board is required to create the rent adjustment by evaluating the data on the cost to operate these buildings, on tenant ability to pay, on projections for this housing stock, on the overall economy, and somehow come up with one singular number and say, this is what the rent adjustment should be for 1 million apartments across the city of New York. Buildings that have completely different financial images, different boroughs, different, I mean, you name it. They look completely different. And so to me, the blunt tool isn't working, hasn't worked, but the Rent Guidelines Board does have the ability to take a real look at what their job is, which is to address the majority of the rent stabilized stock, which inside of that 1 million, the majority of it, over 80%, is pre-1974 housing.
Why is that important? Why pre-1974 is important? This is a key point.
So there's pre-1974 rent-stabilized housing, and then what we call post-73 rent-stabilized housing. And the simple way I can say it is pre-74 is in the rent stabilization system in perpetuity and involuntary. Post-73 is there voluntary and temporary. Right, so that's 2 very different images. So pre-74 is captured by a state law passed as an emergency in 1974 and will likely exist until we all die, and receive no benefit for it. They still pay full property taxes, all the expenses to run a building. The new developments of today being post-73, buildings that folks see on the affordable housing website, buildings that are built with 421A tax exemptions or 485X tax exemptions, that is a developer voluntarily entering into the rent stabilization system, in return receiving a property tax benefit due to the exorbitant cost to develop housing in the city. And in return, the state and the city get a small sliver of affordable housing that is also rent stabilized. Right. But again, they share the term, they do not share the same financial scenarios. Right. And so my testimony to the board was to highlight that and to tell them and to remind them they have the ability to make adjustments that are not just one singular number. They have the ability to get a little bit creative here. And so when you bundle all the data together, it creates this corrupted image at that the mayor and other elected officials will cite and say, well, NOI is up 6% for all property owners. First and foremost, how can every single property owner, I mean, it's just the furthest thing from the truth. You just created an aggregate, but it's being pulled up by higher rents in post-73. Right. But on top of that, you also have free market rents included in there, because if you have a mixed regulated building and you have free market rents, those rents are compiled into the data and skew all the data. So from the onset, the RGB is operating from a pretty distorted image, but they do have a vast amount of data available to them and can be produced and compiled in many different ways. And that's what we try to do. We try and take their data coming from the city and change how they look at it, and then tell them, listen, you don't have to produce one number. You can still do your job. You can still protect tenants. You can still make sure this housing isn't defunded. But you can't look at it as this, again, this just this one blunt instrument to change adjustments.
I think, a broad brush in this category is very, very misleading, and it doesn't really touch the point. I mean, we're selling buildings in the Bronx, for example, at 3 and 4 and sometimes 5-time multiples, which we haven't seen in 20 years. In many cases, some of the units are averaging $1,300, and you said $1,300 as is the expenses, so you have no margin.
Correct.
So you have to think about, why would someone buy that? I'm not talking about financing it even, and so that is very, very true. You have to really look at all the rent stabilized buildings in general, not as one category, but divide it up and decide which ones deserve, so to speak, the growth. When we talk about solutions, right, if you look at the world of the million units that are rent stabilized, and you say, look, I really want to preserve them. I want to make sure that New Yorkers are living in great housing, and that landlords have an incentive in keep managing them.
Yeah.
You have two major options. One is to decide that this is an affordable housing play. The city and state have to invest in it and have to subsidize it so landlords can cater to rent stabilize and preserve it. Or you have the other solution, which is, let's incentivize the private sector to reinvest in these dilapidated assets. So these are, what other ideas or solutions can we give the government or the elected officials so we move forward in a much more productive way, not just for landlords, but also for the tenants and for the city?
Yeah, before we get to solutions, we need the elected officials and government to understand that affordable housing is subsidized housing, right? And should be approached in that way, the way they do for new developments. But the problem is that policy in the past several years has been trying to implement this artificial affordability without accounting for costs. And housing has costs. It's just plain and simple. Many of these issues we have are math problems. And elected officials need to recognize that. The same way a building will not get built and won't, quote, pencil unless the city is injecting a level of capital or even foregoing property taxes, that same approach has to be utilized in the preservation of this housing. When you have 10% of the stock, 100,000 apartments per the Rent Guidelines Board right now, is cash flow negative, where their expenses exceed their rent. I mean, we have a problem here. And this is where lawmakers need to, concede to reality a bit. And even if they wanted to approach it in the way they do with real capital A affordable housing, I firmly believe the city and the state just don't have enough cash capacity or capability to do so. And this is why it's imperative to work with private capital, because it is just a huge stock of housing. NYCHA is 177,000 units of housing, and we're unable to figure that stock of housing out. We're now talking about a housing stock 5 times greater, already in financial distress, already constrained by policy. And we think we can somehow cut costs and save this housing. We can't. So the model we have to go to is a model, bringing it back to California, allowing for a vacancy reset. So this is not trying to undo the rent control system. I know there are policy folks and people in the industry who maybe have different opinions on whether or not rent control should be implemented, but the political reality is that it isn't going away. And so let's make it work. And the way you do that is through a vacancy reset, which, one, and most importantly, improves valuations, because then there's a real projection that this building can actually pay bills throughout future years. But also, to me, it's one of these rare win-win-wins. Right. I mean, a vacancy reset does not increase rent on any single in-place tenant today.
Right.
It doesn't cost the city or state government $1. and it brings housing supply on the market, softening free market rents. I mean, you tell me a policy that does all three of these things. It doesn't exist. Only this one. And for those unfamiliar what a vacancy reset is, back to the scenario of you being that rent stabilized tenant, $1,000 rent, 20-year tenancy, very common in rent stabilization. After you live in that apartment, the property owner is able to reset that rent. Part of that reset requires the owner to invest in the unit, bring it up to today's housing code, lead-free, asbestos removal, upgrade electrical, upgrade water. I mean, these are old buildings. You have to take opportunities to bring it to the new era. The next tenant comes in, agrees to the first rent, and then enjoys all the protections of rent stabilization, which is what rent stabilization was supposed to be, a price gouging measure, right? Not an affordability program that doesn't account for costs. So that is the way you do it. And that is also how you help the rest of the tenants in those buildings. Because what people have to understand, apartments in a building are very much like the limbs on your body. Right. You know, you can live without a few. Too many becomes very difficult to navigate life.
Yeah.
And you need every single apartment to operate in its best, in the best possible way. It has to bring in revenue. It has to account for costs, and it has to help all the other apartments exists, because listen, there will be tenants that still have rent stabilized rents that have $700 rents, and that's great for them. And elected officials will always want to protect that. But if we want to protect the person in that $700 rent stabilized rent, you need an ability to finance and invest in other units when they come on the market.
Yeah, I think that's great, because it reminds me that back before 2019, we had an event, and one of the panelists, without naming names, was asked, what do you think, or how do you care, or what do you think is going to happen when the Rent Guideline Board is going to convene and give you another 0 to 1% increase? That was before 2019. That person answered this way, said, I don't really care about the Rent Guideline Board. I don't care if the rent stabilized tenants get 0 increase. I care about turnover. Once there's a turnover, I get my subsidy, right? Naturally. Right? So that's what they cared about, which means really that the current tenants in these buildings
Right.
can benefit,
Yeah.
and get less burden of rent, and not so much a discussion about should we do 0 or 1% or 2% or 3%. Once a unit becomes vacant, let the landlord bring it up to market. You need to stabilize it back at market, fine, but at least you have something that we can do there.
Basically, that was the main pressure relief valve, is what I tell people, right? That vacancy piece.
That's exactly it.
But now the legislature has effectively closed all these pressure relief valves, where the only one that exists is now the Rent Guidelines Board. So I'm willing to bet whoever that individual is, if you call him or her today, they care a little more about what's happening in the RGB, because it is their only relief to cost increase.
That's right. That's exactly it. We're going to start wrapping it up, and I want to ask you a question. If a tenant, an owner, and a policymaker are watching this, and we're here with you, right, who has all of these different great characteristics and upbringing and empathy to tenants, not just to landlords, what would you tell them that we need to do in New York City today in order to move our housing, existing housing, rent stabilized housing, into a better place?
Well, first and foremost, I hope they are watching. That is my goal, right? To speak to all parties involved here. I don't want to be in a silo. I shouldn't be in a silo. That's not how you make progress. And I continually tell tenants, property owners, elected officials, staffers, whoever will listen, the beauty of New York City and housing policy in New York City, this is not a zero-sum game, and it doesn't have to be. You right. can both address affordability, protect tenants, and meaningfully increase housing supply, and meaningfully create a environment and an industry that people want to invest in, and provide one of the most critical services that people need in the city, which is housing. It is only that our policy and our choices that we've made that make it a zero-sum game, right? Why are rents skyrocketing in the free market? It is because we have all but constrained every other part of our market. Who would leave a rent-stabilized apartment today if it's $1,200, and me leaving means I have to go fend for myself in a market that's asking $4,000 to $5,000?
Right.
I'll never leave. So you don't have the natural, healthy turnover that most markets have. You also don't invite capital to invest in these properties and build new developments that New Yorkers need and want. People don't want to have roommates. People want to raise families here. But if you don't give them the options, we're all left fighting for crumbs. So this pie can grow. We can have civil conversation about how we make it work so that tenants are protected, have options, can meaningfully afford to live throughout the city, but also it has to work for the provider. You want a world where private housing providers are willing to invest in their properties, attract long-term tenancies, and just continue down that path.
Yeah, we have a great city. We really have to make sure that the tenants are doing well, and the capital that's coming here can do well to continue and invest in New York City. Kenny, thank you so much for being here.
Thanks for having me.
And we'll look forward to seeing what else we can do here.
I'll be back with more updates soon, I hope.
Thank you.